So we now have a very exciting panel discussion on strengthening digital financial services and infrastructure. While digital infrastructure has improved considerably in the country over the past few years, people still do not have access to the infrastructure that would be required to build trust and regular usage of digital services. Smartphone penetration is growing, but digital payments apps are often a niche product, competing for limited phone space with regular usage apps, such as some social media applications. Moreover, despite efforts such as the broadband network, many rural areas lack the connectivity to run the often data-heavy apps offered by digital finance providers. To discuss more on how to enhance the infrastructure for digital financial services, I'd like to invite Dr. Arpita Mukherjee, Professor, Indian Council for Research on International Economic Relations, on stage. Dr. Mukherjee has over 30 years of experience in policy-oriented research, working closely with the government in India and European Commission. She completed her PhD in economics from the University of Portsmouth, UK. Can we please have her up on the stage? The next speaker for the discussion is Dilip Kumar Modi, founder of the fintech startups Spice Money. The company aims to bridge the gap between the served and the underserved by providing digital and financial services to customers at their doorstep through its million-strong Adhikari or nanopreneur network. Dilip is a second-generation entrepreneur who has built several businesses within the Indian mobility and technology space. Please join us. Next, we have Ms. Seema Prem, co-founder and CEO of FIA Global. At FIA, she is responsible for creating social impactful products and services to meet the needs of underserved communities and markets. She is also responsible for advocacy, governance, and building strategic relationships with governments and other key partners to support and scale social innovations. In the last decade, under Seema's leadership, FIA has grown to set up 30,000 banking outlets and serve 45 million customers. Please join us, ma'am. Joining them next is Mr. Shireesh Joshi, Chief Business Officer, ONDC, a first of its kind initiative globally to democratize e-commerce in India. He has over 25 years of experience in marketing, strategy, business, transformation, expansion, and operations. In his current role, Shireesh is working to create the largest interoperable open network in a bid to break e-commerce monopolies and create a more democratized digital marketplace by bringing micro, small, and medium enterprise as well as small traders online. Please join us, sir. And to moderate the panel, may we please have Sugandh Saxena, CEO, Fintech Association for Consumer Empowerment, a non-for-profit industry association committed to building a robust fintech ecosystem in the country. Sugandh comes with over 2 decades of experience across sectors like microfinance, social economic development, technology, and non-profit. Over to you, ma'am.
Thank you. And we have a very complex subject. It's digital financial infrastructure. I think it can't get complex in this, like we are part of it. If you go by literature, it talks about everything under the sun, I guess. When you talk about digital financial infrastructure, we talk about infrastructure, of course, but also rules, regulations, customers. Technology has a much greater role to play now. And it's fascinating how this infrastructure has evolved, over a period of time. We always thought infrastructure in terms of physical. Today, I think digital is something which is most prominent way of looking at infrastructure. When it comes to players, I think it was very much dominated by banks for the longest time. Today, I guess non-banks and increasingly fintechs have much greater role when we talk about infrastructure as a such. And third is, I feel that there's this Maslow theory, right? We are never satisfied with what we have. And you have, if you use the analogy of roads, you have the best roads, but then you feel that, okay, it should be beautiful, it should have trees around it, it should have convenience and so on. So there's always this desire or the customer expectation to how to make it better. And what next? Perhaps my son would ask, it's ubiquitous, it's so much given, right? Everybody has phone, everybody has bank account, everybody has what they want to do. So what? So what next? So I think these are some of the forward-looking ideas. So we have a very fascinating panel with us. Three doers, I would say, who have built this infrastructure with lot of effort. So delighted to have them. And we have somebody in Arpita who can perhaps take a 30,000 view of what things are happening. So I'll kick off the conversation. I'll start with Seema, you, because of course FIA is a very fascinating story in terms of what you have achieved, and more particularly because a lot of reports, even recent World Bank reports, says that digital has perhaps narrowed a lot of other divides, but not a gender divide, right? It still remains very, very persistent and hard to break. So tell us how you achieved it, and as a somebody who has feet or the branches on the ground, how do you combine both technology, because you can't call yourself as a fintech company but it still provide that human touch. So over to you.
So I hope everyone can hear me. So FIA Global is an impact fintech, and we set up banking outlets on behalf of banks. We open bank accounts, and we have opened 65. We serve around 65 million customers. 53% of them are women. So I think clearly the gender divide has been bridged. So if I look at how we have done that, I think when we started off in 2012, we set up, I can give an example here. We set up an outlet in Ghaziabad in a rehabilitated slum. The name of the gentleman was Chaman Prakash. He ran a ration shop. So adoption was not, so it was sluggish. We were opening about 5 accounts every 2 to 3 days, despite that slum having around 3,000 people. And suddenly the number of accounts and transactions picked up. And we were surprised. We thought some fraud was happening. We went there to investigate. And then, to a pleasant surprise, we found a line of women, mainly women, standing in front of the banking outlet. And a lot of elderly women also. At the end of it, there was a table and a lady was sitting there filling up account opening forms, because at that time we had to fill up physical account opening forms. So what Chaman had done was he had moved the day-to-day operations of running that banking outlet to his wife, Poonam Prakash. And within a span of a month, we had 800 accounts. In fact, in 3 weeks, we had 800 accounts. More than 60% of them were women accounts. So the simple takeaway for us was invest in women and open more women centers. And that set the way for us. So we would go to all of these places and convince the spouses or the fathers to open a banking center in their wife's or their daughter's name. And then we realized that as more and more women started running these centers, automatically more and more women bank accounts were opened. So our data shows that the more you run, have with women tend to be more inclusive, open more elderly accounts, more minority accounts, even minors accounts. We have less customer complaints with women. They have higher performance when it comes to social security schemes, and zero frauds. So we have only had one fraud with a woman agent. We were surprised. We went to investigate. That is in the last 12 years. We went to investigate and we realized that it was the husband had opened the center in the wife's name and he was running it. Yeah, so it just makes your business sense to invest in women and have more women in your teams. So when we set up this digital infrastructure, that's one focus area for us. We have more than 20% of our agents are women banking agents, and who earn a sustainable monthly livelihood for us. So sustainable livelihood is around 12,000 rupees at the moment, and that's what we work towards. Yeah.
Excellent. I'll come to Dilip, to you. Again, very massive success story when it comes to, I would say, highway on your plate for customers. They just go to your adhikaris and do what they want to do. And very innovative the way you have layered not just the financial services but what the customer need. So your perspective on financial infrastructure, particularly, I know you are very much about innovation and products. So talk us through.
Thank you so much. I'm so inspired by this. We hope that we can get more women to as BC agents on our network. Our penetration is still like 3% compared to 20% of yours, so I hope we can learn a lot from them. Just to share with you, I think we are a product of India Stack. As many of you know, Aadhaar enabled payment system, and the fact that 1.2 billion Indians are now registered on Aadhaar, but also more importantly, 800 million bank accounts have got seeded with Aadhaar. So we are a product of India Stack because we are using Aadhaar-enabled payment system to convert a small merchant in a village or a small town into an ATM or a bank branch point. So just to share with you our story, just before COVID, we had started opening up a lot of merchants in small towns and villages who came on our platform, to deliver financial services in their community. We were adding about 1,000 merchants, like about 3,000 merchants a month. And when COVID happened and lockdown happened in March 2020, in April 2020, our numbers jumped from 3,000 merchants a month to 30,000 merchants a month. And the reason that happened is because, as we went into lockdown, we saw a lot of people move back to the villages in India. We've seen pictures of people going back to their village because factories got shut down and all of that. And government started putting a lot of money into people's bank accounts. The whole Jan Dhan account scheme that happens, the 400 million bank accounts that the government has opened. But the problem was, if someone wanted to withdraw cash from the bank account, they had to go 20, 30, 40 kilometers to get to an ATM machine or a bank branch to withdraw the cash. And there are horror stories that we've seen of elderly people having to travel huge distance just to get to an ATM point or a bank branch. And I'm talking about 100, 200 kilometers from the city center.
So effectively what's happened is, in the last whatever years since independence, while number of bank accounts have grown, the number of bank branches and ATMs have not grown in line with the bank accounts. So today, even if I have a bank account, if I want to access the bank account, I have to go to a bank branch or an ATM machine. Now for us, we are all used to that in big cities, but when you go into the deep rural India, it's very, very sparse, right? It's there, but it's not as adequate. So what we saw is a lot of small merchants, young merchants in rural India downloaded our mobile app, and we did their online KYC. Effectively, they became like a digital BC agent for us, and we shipped them a small biometric machine. Now what happened is, suddenly if a consumer in that village wants to withdraw money from their bank account, instead of having to go 20, 30, 40 kilometers, they go to their merchant next door who's got onboarded on our platform, provide their finger biometric, tell them the bank name and how much money they want to withdraw. At the back end, we authenticate with UIDI and the bank system. We know that this is the customer whose identity it is, this is the bank account into which that identity is seeded. The money moves from the customer's bank account into the merchant's bank account, and the merchant withdraws cash and gives it to the customer. So with this, every merchant in the village effectively becomes an ATM point for the consumer. So instead of the consumer having to go a long distance to withdraw cash, they can actually withdraw their cash from their bank account at their nearest merchant point. Just to share with you, in the last 2.5 years, we've gone from very few merchants to now 1.4 million merchants who are using our network as ATM points, to disperse cash in nearly 250,000 villages of India. And we serve about 25 million customers a month. And now we are layering other products and services on the back of this. So, we are really excited about the opportunity that exists today in India to use technology to extend the reach of formal banking and financial services into deep rural India. So I'm very excited by, the journey ahead of us.
Yeah. I'll come to you, Shishir. I think most anticipated new initiative. I think there's a lot of hopes which we all have with this kind of framework, which is premised on the concept that we will have inclusive growth, and all of us or all the small businesses would be part of it. You also have a very rich telecom experience, which again is a sort of big success story India has seen when it comes to infrastructure and what is the role of infrastructure in facilitating everything else. So from your perspective, how do you see e-commerce or somebody like ONDC shaping the financial services infrastructure? How would it contribute to that, or maybe shaped by vice versa? I think both happens. Your thoughts, please.
There are many levels at which the ONDC project can benefit from and impact the financial sector. First of all, it's aiding commerce. That itself means there is goods going one way, money going the other way, and all the other related support that that money needs. So whether it is creation of nodal-like accounts where money can be held, whether it is creation of payment services both for the buyer, so buy now, pay later EMIs, or for the seller because the settlement time may be long and they might need help. That's purely at the transaction level. To investments to grow, which is based on flow-based information. You don't have to give collateral as your land or a store that you own, but your business flow can become a basis. So there are many ways in which the operations can be embedded. And then finance is also a service category. And so financial products as an item to be sold itself. And we will begin with that soon. So gift coupons, FASTag, soon moving on to insurance and even mutual funds will become items to be bought and sold. So it's both greasing and enabling the commerce machinery wherever that needs help, and then financial products itself as an item to spend. And that's a huge subject.
So, Arpita, now you're thinking, you have heard three, so entrepreneur I would say, and see what they have done. What is your thinking? Because you take a lot of consumer survey, you see where the gaps are, where the problems are. So what would be your perspective that what we have achieved, and what we have not achieved and where the gaps are?
See, when you look from a consumer perspective, I think that some of the developments are amazing. Like if you look at the Jan Dhan account, but access to an account in India was a problem. Now you have access to an account. Now the mobile phone is linked to the account as well. So that's again something which is amazing. And UPI since 2016 has been able to, you see the numbers of UPI, the number of transactions, they look marvelous. So these are, I would call these as achievements. Now, when you talk about, I would not call as a miss, but I think where we need to really put in more effort, because we are a developing countries, and any developing country as they move forward, there are areas where there are gaps and they try to seal the gap. One of the gaps that we found in our survey was that there is a lot of packages on financial inclusion schemes, etc. There is a lot of policy on digitalization also. But where is the policy on digital financial inclusion? If you ask somebody, give me, 3 policies on digital financial inclusion, educated people will take time to think. So that's a gap. Secondly, many countries like Kenya has very clear policies on that part. Secondly, whom are you not able to reach digitally is very important, and that is very clear during the lockdown. See, farmers were getting their payments through digital mode. Government was able to reach to the farmers in India. Government was not able to reach to the SMEs in India. So that is a gap. Then women can be a gap. Youth can be a gap. Not only India, as India is hosting the G20 presidency, many developing countries have the gap. So the gaps have to be identified. Which are the maybe distant districts where there is a problem? Everywhere in India, the issue is not the same. So there can be regional disparity, there can be disparity. Now, this issue is not coming up from the current UPI. The data doesn't show the disparity. You cannot divide the digital financial inclusion data into who is doing the transaction, who is not doing the transaction. That is something we need to be more careful about. Secondly, as has been rightly pointed out, there in India, you have a lot of startup, lot of technology expert, and we are doing global fintech. So I don't think there is a lack of technology or the willingness. But how the technology matches with the financial institutions to build a creditable digital financial inclusion model, because there is a lot of security threat. In our survey that we found that people are often not very worried about using the financial instruments through digital channels and feel like going to the bank, maybe because of 3 reasons. One is that probably they may have a phone but not a smartphone, so they may not be able to access that gap. Secondly, the biggest issue is the fear that things may go wrong if I do things online, if I type a wrong key, what will happen? So that leads to two things. One is the security and fear of being cheated. This third thing is actually digital financial literacy, and digital financial literacy in itself is very, very different from financial literacy, and that is somewhere I think there needs to be focus, and that leads to the e-commerce platform also, that once you have a digital financial literacy, then you need to look into commerce both in the domestic concept and in the international concept. There are many micro businesses which are doing international trade also, or thinking of doing international trade, and they ask me the question, what happens if I have a return consignment? And there is no answer. Although FTP has a policy on e-commerce, they have another question which I am raising, that I will get a scheme benefit if I am exporting through a e-commerce platform. But what happens if I export directly through a express platform? I should get it because the model is same. Like e-commerce company is using DHL Express, I am using DHL Express. There is a lack of clarity in that. So there are many things which is happening, but there are some places where there is a lack of clarity which comes in our survey. I think those are very low-hanging fruits to see.
No, I'm glad that you raised this point of security and the confidence in the digital world, right? At least in the lending side, we have seen influx of, such apps, in 2019, something like 60% of such apps were illegal apps, coming from hostile countries. Problem has come down, but we still on a daily basis see many such apps coming in the marketplace, and there is no way customer can identify which company is legit and which company is not, and which completely undermines the customer trust. So with that as a theme, Dilip, I want to come back to you because you have built a big brand. There's a lot of trust with which customer come to you, and you 1.4 million you said, this is a huge number. How do you really make that this infrastructure is safe and secure, and especially on the cybersecurity side, because we see that it's going to increase. As a country we become more digital, I think it's only going to increase, and most often we seem to be catching up rather than being ready to the challenges that we have. So what would be your thing?
No, I think these are very important points, and I would absolutely agree on this point of digital financial inclusion. See, I think on one hand we have an opportunity because India now has over 800 million smartphone users and another 500 million, or 400 million feature phone users. So everyone's got a phone in their hand. And internet is reaching with 4G and 5G connectivity into deep villages of India. So this is the opportunity, right? Everyone's got a phone and everyone's connected to internet. The question is, how do you layer financial services on top of it in a manner where, it can be secure and it can be trusted? And I think, a lot of work is happening in terms of figuring out how do you track transaction data at the back end to be able to. So I think to begin with, I would say KYC, right? Biometric based eKYC has been a big development because, nearly over 1 billion people with their biometrics registered, compared to OTP. So, when you talk about digital financial services, there are two platforms, right? One is UPI, where your mobile number is linked to your bank account. The other is Aadhaar enabled payment system, where your biometric is linked to your bank account. So when we talk about UPI, about 250 million users a month, APS is about 150 million users a month. On both accounts, we have to figure out how to reduce fraud, because we hear about OTP fraud, we also hear about Aadhaar fraud, right, where people are doing this, cloning of the fingerprint. What we are doing at Spice Money is, a lot of our merchants that we onboard, are digitally native. So nearly 2/3 of our BC agents are between the age of 25 and 30. So they are young, digitally native agents. We are constantly, from the time they come on board to the first transaction they do, and as they scale the transactions, we are tracking data online in terms of velocity of transactions, frequency. If a person is doing using one Aadhaar identity to withdraw so much cash, at the next stage, when is it happening? Is it a subsidy money being withdrawn? Is it regular money? So I think at the back end, a lot of systems are being put on velocity checks, KYC, and we also have a situation where we do a lot of random audits in terms of physical verification. I think this is a journey. I don't think it's very, there's no straight answer to this journey. I think we have to solve for it. I think, like you said, everyone's trying to do fraud, so we have to stay a step ahead of it. One of the things we've realized is, as we are working with small merchants in rural India, they share a lot of trust with the local community, right? So we've heard, our customers talk about that they would prefer to deal with respect to their local merchant than go to a bank branch, and because they trust them, there's this local understanding. We hear of this local khata system that exists. So, people are giving informal credit, right? Because there's that trust which exists. So how do we build on that? There's very little fraud happening within the village itself. And we see that on our platform. But to answer your point, I think the question of cybersecurity and, building confidence in the platforms, I think there's genuine fear. As we try and increase the UPI number from 250 million to 500 million, that with the click of a button, the money will just go away from my bank account. So RBI is working on, encouraging people to use wallets, which are prepaid instruments, which are more secure. It doesn't directly link to your bank account. So ultimately, the idea is to take the customer step by step from cash to wallet to bank. And in this journey, kind of give them the confidence that they can trust a digital platform to do financial services. So I think it's a journey, but everyone's working to solve for this as we go forward.
Yeah. And I think this is where, a brand like yours have a very critical role to play, being in the deep area, because I always feel that while as a fintech institution, you can verify the customer, but customer has no way to verify you, right? Are you a right company or not? For me, I can't do that. We have seen so many companies, with nice website, nice apps, with all the fancy things around it, and it's very easy to be, cheated by them, right? And I can tell you, even if you go to Play Store now, you will see in the top finance app, there would be at least among 50, you will find 8 which we know are fake, right? They do trading, they will guide you for what, right? There are people who guide you how to take loan. So, and they manage, because the way they manipulate the marketing and the advertising mechanism through social media is incredible. And therefore they can come in. And therefore, this is where the trust comes in and the brand comes in, where they know that, okay, I should go to this place and not to this place. Will be very critical, I guess. So,
and I think that's why customers at large trust banks, and as you go rural, they'll trust the public sector banks, because they know that they will not, run away with their money or, do fraud from them. So I think, that's why the trust in the fintech ecosystem has to grow in line with the trust with the banks. And I think fintechs have to learn from the banks and the banks have to learn from the fintech. So it's a joint journey together.
Seema, I'll come to you again, just in terms of, when we talk about financial infrastructure, obviously we tend to focus a little more on the physical or the hardcore part of it, but there are a lot of subtle cultural and other elements to it. And this is where financial education and customers' preparedness come in. So from your perspective, how do you see, financial health and well-being being important part of infrastructure? Because we go on the road, but we are as safe as other person who is driving on the road, right? So
when we build a digital financial services infrastructure, it necessarily leads to financial inclusion. And how robust your digital financial infrastructure is, it results in sustained financial inclusion. And financial inclusion is is a driver of financial well-being. We classify financial well-being as financial security, control, and resilience. And however, it's not the major driver. And what we realized post the pandemic was that during the pandemic, our average ticket size of transactions came down. Our agents had to work more and do more number of lower ticket transactions in order to earn more, or earn even equal to what they were earning before the pandemic. And when we asked them, they said, "Logon ke paas paisa nahi hai." So that was the question that, that was the common answer that we got. And that's when we realized that financial inclusion is a driver of financial well-being, but it is not the main driver. There are socio-economic contexts, like the nature of occupation, your education levels, and your income levels, which determine financial well-being. And we need to set up a platform which actually focuses on financial well-being as well. India is at a stage where there's a lot of, I think the transition has to be made now, that the entire ecosystem actually moves from financial inclusion, talking about financial inclusion, and reporting numbers around financial inclusion to financial well-being. So we talk about the number of UPI transactions, even I do, we track gross transactional throughput, a number of transactions on a daily basis. However, we need to shift now to more of financial well-being metrics, right? How financially secure are our Indians? How many of our Indians live paycheck to paycheck? What are the aspects of financial security that we need to control? And I think we have the right digital infrastructure in place. All we now need to do is develop a one-stop shop which takes care of all the financial needs, which leads to both financial inclusion and financial well-being. So you have your banking, you have your digital payments, which takes care of the basic transaction needs of customers. You have income generating loans, which leads to wealth creation, which is a necessary component of well-being. Then you have wealth growth in your wealth and protection of your wealth through investments and insurance. And that is the need of the hour. And I look forward to seeing more policies from the government. I do see, OCEN is a classic example of, how it's a UPI of credit, it's a UPI of credit, and that definitely will lead to wealth creation. So moving a lot of the dialogue towards financial well-being, I think will help us reach that goal faster.
Shireesh, just from your perspective, again, drawing from what Seema said, you will have massive number of people, linking with ONDC, merchants as well as customer. And particularly on the merchant side, very, very small businesses, that is a plan, right? So how do you ensure that, kind of financial services which is offered to them is suitable, which obviously helps them, because ultimately we all want them to increase their income and financial health. And related point which we heard before, right, financial leasing, for example, something which has not taken off. Do you think ONDC could be driver of some of these innovative product suite which merchants can scale up?
I think so, because when you reduce things to building blocks and allow them to connect with each other, more things are possible. Right? Let's just look at what's in front of us. So here is a wooden table with a stone top, and there is a made-for-purpose lectern. Now, it's a finished product, therefore it can't do anything else. But if I reduce it to its building blocks, right, that the legs could be separate, the top could be separate, and I can take that table, I can take two of those legs, put them on top, put this on top, and I have a new lectern. So the idea is that when you reduce things to building blocks, it allows you to recombine. That's the heart of the ONDC idea. That don't build a monolithic commerce that can only do one thing, reduce it to its building blocks and it can be recombined. Now, if you take that premise, then it's possible to find any combination of buyer, seller, financial services, delivery systems as needed by that combination at that point in time. And so what we are hoping is that the first things will be only the simple, obvious ones, because that's what we see today. But once those are in place, then the next thing will come. And when that's in place, then the next thing will come. So how did UPI happen? UPI didn't happen first as UPI. First Aadhaar happened, then bank accounts happened, then UPI happened because UPI needed those two things to be in place. And so things build upon each other. And what we see as ONDC will allow reducing commerce to building blocks that then allows anybody to very efficiently, affordably recombine them differently and create a new service, because the building blocks are present. They only need to build that additional layer. They don't have to build the entire system. So we do expect that it will give a very big fillip to all sorts of financial services, whether security, whether growth, or whether protection, all of that will be possible.
Shireesh, I'll stay with you because I know you have a very deep experience in telecom, again, which is fascinating in terms of what as a country we have done. It's not even, people don't even talk about it, right? It's done. 5G is okay, 6G is okay. But so tell me, just from the customer experience point of view, we all get same experience. So is this something which you will think financial services can be done or missing when it comes to, if I have to compare it with telecom infrastructure?
So first, I don't know if users will necessarily claim, they get the same experience. As in any category, there are people that swear by one service provider and somebody else will swear by the other one. And you could be neighbors, so it's not even, it's a different geography, but you'll say, in my home, I get this network very strongly, and when I go there, right? So yes, at its core, the idea is simple, right? Somebody is producing towers, somebody is producing airwaves, somebody is producing a device, somebody is producing a SIM, and it all comes together and we talk and exchange messages. But Despite that, the experience is not the same. And the same thing was true in the financial sector. You walk into a bank account in the physical days, then it's the clerk at the counter who's your experience. While the financial product might be the same, do I get parking when I have to go there versus somewhere else I don't? So while if you reduce it to its core idea, yes, the service might look like everything else. Same thing will happen on ONDC. And as simple thing as a user interface. Right? Where do I find the options to find something easily? The product might be exactly identical, but in one I find it easily, in the other one I do not. So the ways by which people can make experience easier, experience more powerful, improve discoverability, help buyers and sellers figure out each other. So in financial services, both parties need to figure out each other. And so even the lender will need to make sure that the party they're giving loan to is a bona fide entity, and that the money will come back one day. So mechanisms will emerge and people will provide components. So we are also enabling badging, where each side can acquire a badge legitimately that will validate who they are. Right? So just the way you can make a API call to the Aadhaar service and say, okay, genuine person, issue a SIM card to them. So you've enabled those components. That will happen even here, where information, so all open networks will talk to each other, right? You can access information through account aggregator, and all of them will then enable buyers, sellers, finance providers, data systems to talk to each other and create whatever combination is needed. So I think we are in for some very exciting times ahead.
So Dilip, I'll come to you. Slightly controversial question, but see, we are talking about a very young country, right? 800 million people less than 35 years of age, 40% or so, even less, right? And these are, very digitally native customer. Do you think at some point you will not need really the physical, do it yourself, what ONDC is talking about? Do you really need these branches or these people to navigate the financial services?
No, I think very clearly, if you look at directionally, customers will be able to do a lot of things on their own. And, young people more so, because, we were doing a panchayat in a small village, and it was very interesting to see that all the people who were sitting in the panchayat were all the elderly people, and all the young people were outside on their phone, doing something or the other, watching a video or doing something and all. So even in villages, the penetration of phones is very deep, and it's all amongst the young people. So in our kind of ecosystem, we've actually started calling out the woman in the rural household as the CFO of the family, because you can trust her with the money of the family, and she is known to save the money in her gullak or wherever she puts it. And the young person as the CTO of that household, like the chief technology officer. So effectively, it's the woman who's saving the money, and the young person is figuring out how to use technology, to begin with on commerce and entertainment, but hopefully going forward to be able to do more with it. So I think definitely this idea of, lots of young people consuming services directly on their phone, I think is very clearly the direction it will go. I think, and it's great if it goes that way, because ultimately, if you can put the power in the hands of the consumer and get them to do a lot of things themselves, and that's the power of UPI as a platform, I think it's great. I think the question will remain is that if they get stuck somewhere, where do they go, right? And all of us have witnessed this, right? Sometimes when you're dealing with a pure online platform, and you get stuck, you're calling a call center or you're trying to figure out. Now, when it comes to financial services and you're doing a transaction and the transaction gets stuck somewhere, you've moved money and the money is not reached where you meant it to reach, there has to be some sort of a way to address that grievance. And I think that's where, all companies who are providing these services have to solve for it, to make sure that they keep the customer empathy in mind. Because as the number of transactions grow, as the number of users grow, you can't treat individuals as numbers, right? Like, 800 million, 200 million, every person, especially when their money gets stuck, it's very significant. So where do they go to address that is the big question. And I think that's where maybe a combination of digital and physical is important. So not necessarily the way the bank branches are today, but I think there has to be some mechanism to solve for, when you get stuck, on a transaction. And I think, everyone has to be empathetic to that situation. So like we are trying to solve it by making sure that we have, back-end call center infrastructure, but we also have people on the ground, partners where customers can reach out to and engage with, who can help them to solve their problem. So I think, I would say we have to figure out innovative ways to do it, but we have to be empathetic to customer needs if their transaction gets stuck. But to your larger point, you know, as smartphone penetration grows, as digital literacy grows, as financial literacy grows, can people do a lot of things themselves? They should. The power should be in the hands of the consumer.
Yeah. Seema, your take.
So we see our agents are right now selling sachet financial services. So it's like, you know, a Kirana store selling soap, small sachets, shampoos. So our journey that we see is we move them from fast movers of financial services products, tellers basically, to financial advisors. Because we want more and more complex products being sold, like mutual funds, insurance, even loans, and a variety of loans if OKIN is possible. So they move to that journey, and we move from an assisted model, and we definitely want our customers to move from an assisted model to a self-reliant model where they do their financial services and transactions on their own. So I think for us the ultimate vision is empowered Indian woman who is actually able to do all transactions on a smartphone, make financially database driven decisions on financial products, and also use the financial services platform to grow her income and become truly financially secure.
Arpita, I'll ask last but very broad fundamental question. I think, you know, digital financial services or financial services thrive in a context, right? Unless people's income increase, education increases, they have more to do. You know, we are driven by that, you know, it's a customer demand. So where do you see, because, you know, we still have a lot of people with very meager income, so to speak. Economic activity in large part of India remains slightly on a slower front. Women workforce, I think, has been declining, not increasing. So in that kind of environment, and which is a reality, I'm not saying it's a reality for everybody, but it's still a reality for many. How do you see, you know, policy, what would be your expectation from the policy side to do that? Because all of us, whatever we are doing, we could do more only if these fundamentals also improve.
See, policy can, you know, to have an effective policy, you need to see a effective scenario. Today, the problem is that we are all thinking this is good, that is good, but based on a lot about our assumptions and what we need to do. We need to have some ground level data, or whatever data we have collected has to be stratified and analyzed to understand the gaps. So what we try to do is to understand the gaps. Like, for example, we did a survey for NABARD, and we found that even SME women entrepreneurs, when they are doing B2B transaction, they are using the online platform. But when they are actually paying their employees, you know, which is an women employee, they are paying in cash, because the women is asking for the payment in cash because they don't want to show the money, or maybe any reason. Not secure, maybe having the account. So there are cultural issues, there are gap issues. But I can tell you the three major gaps that we felt as an educated person. One, few women asked us the question that what are the schemes and policies that are available for me to take loan, what are the requirements, how do I do an online requirement filling. Frankly speaking, I could not. You know, if you go, so many schemes and policies are there, central government, state government, where do you get them? You know, the one thing is that the information has to be available first on the digital platform in one place. Like, if I click a button, I know these are the schemes under this government. If I am located in Karnataka, this is what fits me. Second is, when you go for a checking in the bank, if I have 5 bank account, 2 bank account, whatever, when you go for a checking, every time I go to take a loan, same document is being asked for. Do you give me your KYC, give me your, as educated consumers also, we are asked, you have a bank account, you have a locker, give your KYC. Why? You should have a digital locker, right? So these are the kind of, if you go to digital financial sector experts, they will talk about blockchain, this, that, they will talk about high level of technology, but something very simple, where the bank also has your information, because sometimes the bank is questioning your existence, your Aadhaar card and your account is not your existence, so that your existence should not be questioned. Your credit history, the way developed country builds a credit history, we have to build a credit history. Your credit history is pretty much online and transparent. So you are not questioned on things that are automatic. And that is where I think in terms of the technology, in terms of even the public sector bank, everybody needs to work towards on the technology front. Policy front, there has to be some kind of a vision or roadmap of what India wants to do in digital financial inclusion. That vision is not really in place, and if that vision is in place, I think everything will fall in place.
We have time up, but I can take one question. Yeah.
Thanks. My questions to Dilip and Seema. The BC channel, the way the construct stands today, has not been able to fulfill the need for facilitating savings. And there are varied reasons. I won't get into the details. Either there are transaction limitations, or AEPS withdrawal is allowed, deposit is not allowed. So this is in some way limiting the flow of funds cycle. While we are talking of higher order products, complex products and all of that, but the fundamental foundational element is to facilitate savings. Today perhaps 90% of the transactions are cash withdrawal, AEPS into bank. Either the issuer bank is not there, and that adds to complexities. Do you see any solution to this inside? How do we work to make this happen? Even the agent level incentives are not aligned.
Pre-pandemic was that we have a component in our agents commission which is called average income that they earn on average balance maintained in a customer's account. So which means initial days customers were putting money and they were withdrawing money 100%, but over a period of time they were slowly retaining money. And gradually over a period of time, for certain banks which is offering us that commission, as a proportion of the total commission, it became 10 to 20%. Now during the pandemic, extraordinary circumstances, one of its kind, a lot of withdrawal happened, came down. So savings pattern was actually disrupted. So what we saw is a steady build-up of savings, but not at the pace that we would expect. And largely because incentives are more aligned towards cash transactions and cash withdrawals and deposits. But recurring deposits, savings, fixed deposits, we have seen a steady increase in the deposits. Not really at the pace that we would expect. 10% of our customers, which also varies from geography to geography, have enrolled in fixed deposits and recurring deposits. So what I believe that's needed right now, one is not all banks pay on these average balances which are made in customers' account. And the incentive, because the FD and RD is a push, it's a push product. You need to educate the customer to invest in that. The incentives need to be aligned, not pay them the same as they would pay for a cash transaction. So if all the banks across the country adopt that, then definitely basic savings in FDs, RDs, and even just maintaining the balances in your bank accounts will go up. But wherever we have seen about less than 10% of our banks offer those products, offer commission on these products, but wherever it has been offered, we have seen a steady increase in the adoption of these products.
So Amit, as you said, there are certain infrastructural problems to begin with, right? Like APS cash withdrawal is now 30,000 crores off us market a month. And a lot of this is it's held up. It grew in the last 2 years. Now it's kind of stable. But AEPS-based cash deposit is still not enabled by the banks. There are technical challenges. There might be some commercial issues that the banks have. But effectively, that's enabled because we've noticed, we've spoken to customers.
The reason they don't want to leave money in the bank account is because in any case, they have to go that journey to withdraw money, right? Now, unless we don't enable AEPS-based cash deposit, there's no incentive for them to go back to the bank branch to put the money. So there's an infrastructural challenge we have to solve for it. We're working with UIDI and NPCI to solve for it.
But they're directing us to the Department of Finance and Revenue to figure it out with the banks. So we have to solve for that infrastructural problem. The second is what Seema mentioned, product innovation, right? How do we build incentives?
We've heard customers in Panchayat talk about the fact that, to digitize cash costs money. If I keep money in cash and I, pay in cash and save in cash and give in cash and take in cash, there's no intermediary cost. But the moment I go and deposit money and withdraw money, I get charged. Something like that. So there's a cost of digitizing money. We have to solve for that, right? In terms of, because people don't want to pay that cost, right? So we have to create the economic structure along with product innovation to create, like we talk about micro credit, we have to figure out micro savings, micro SIP, micro investments, because how does that money multiply? So I think it's very clearly an area that is a call out.
In a lot of ethno work we've done, savings is significantly underpenetrated. It's still informal chit funds and all those things which happen. We have to figure out products. So infrastructure, products, and incentive. I think if we can solve for this, I'm sure with the kind of BC network we have, we can create that awareness that if you put money back in the bank account, it can multiply for you, right? I don't think that awareness cannot be built, but you have to just solve for product and commercials, right? But I'm sure we're all thinking about this, so I'm sure the ecosystem will solve for it.
Okay, thank you so much. Thank you so much, all the panelists. Thank you for the audience, and sorry for the delay. Thank you so much.